Hello and welcome to Pro Trader Strategies Market Commentary for Monday, December the 31st. My name's Eric Wilkinson, and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I am here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. Also, remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on. Last day of 2018. Let's try and see how much we can scrape off here before the end of the year. So having said that, let's talk about the overall markets because there's not a whole lot of economic data out there. It is a bank holiday overseas. Here in the United States, we are not allowed to have the markets closed for more than 4 days in a consecutive row. So that gives us this Monday to work. But having said that, I think it's going to be a really light day, and I'm probably not planning on doing a whole lot more than what I've already done, which was only cover one of my trades. So we'll talk about that later on. Right now, we've got crude oil pretty much unchanged across the board. The markets are pretty quiet, and I don't really expect a whole lot out of these. But with crude oil pretty much unchanged right there at the $45 mark, I do expect this to continue up at least into the 50s, maybe the mid 50s right here. 50, 55 is kind of where I'm looking at crude going. Gold futures finally looking like they might be topping off a little bit here. I've talked about, I think they're a little overextended. We've seen all of this happen in the equities. With the equity sell-offs, people get out of equities and put it into a safe haven like gold. That's driven gold higher. I think that now people are getting a little bit more relaxed. We're seeing the VIX even come off. Having said that, I think people are a little bit more confident than they were about a week or two ago, and that's going to affect gold negatively as they roll out of gold and back into equities. So I expect gold to start coming back in and around down to this 1225 area, which I've talked about a lot. I thought we had kind of settled down there on this bounce, but the equities continued to sell off, which drove gold higher. Then bonds, unchanged really across the board. We're just kind of migrating sideways. People are trying to really decide whether or not the Fed is going to continue their rate increases, which I believe they have 2 planned for 2019. I think that those are going to come off the board as the overall economy has started to slow, and we're going to need to see some easier money going forward until the economy really starts ripping, which I'm not seeing right now. All right, let's talk about the equities, starting off with the VIX. VIX continuing to come off as the equities rise. So they're now really rising today a whole lot. We do have the Dow up about almost 200 points on the day, but as you can tell, especially when we look at the E-mini S&Ps on the breakdown, you'll see that it's just pretty quiet, not really any movement really whatsoever. It's pretty much day trading going on right now. I think most people have closed their books other than us retail traders. But you can see with the Dow Jones up 180 points, it doesn't look too bad. The last two dojis that we got this little bit of a topping pattern here. It didn't get confirmed, but the way that the market reacted, it seems like it's one of those continuation patterns. And we haven't got a confirmation for that today, but I believe that this week we are going to start driving higher, get back into the value area, break through this value area low, and then start migrating back to the point of control. Again, with the mini S&Ps inside day, these two dojis lining up next to one another gives me the belief that it is more of a continuation pattern to the upside than maybe a topping pattern down here or a dead cat bounce. This is what I was talking about with the mini S&Ps on the 30-minute chart. Each candle represents 30 minutes, and the blue section represents a full day. One almost would believe that this is an inside day, but it's not, just because how quiet it is. It's not quite an inside day, but very much lining up with Friday's settlement or Friday's range, and for the most part. Now, a couple of things that I've done with Target. Remember, I added a couple of these trades. I finally taken them off with this move higher. The VIX coming off, volatility coming out, helped me out with all of these premium selling strategies. So Target I got out of on Friday late in the day. And if you remember, I had on the January 56 puts in there that originally sold for 72 cents. I was able to buy those back Friday for 32 cents. So slightly better than 50% of my max profit, but I was working in order in there throughout the day on basically all my trades, and that was the only one that got hit. And then also with Netflix, I did this trade rather small, but about a half tranche for me, and went into the January, and I had sold the 200 puts at $4.80. I covered those this morning for $2.20. Might be able to get out of that a little bit better than where I got out as this volatility continues to come out and the overall market is just slowly moving higher. That's all I've got. Other than, I'll see you next year, 2019, right around the corner. And if you can't take that, take it easy.